Hi, I'm Simon, this is Two Ticks. In trading, there's some stuff that shows up very quickly in how people set things up initially. People choose a trade size that feels worth their time. That's because they want the outcome to matter. People don't just get up one day and enter crypto casually without a thought. They're usually trying to improve something in their life or relieve some pressure or financial or whatever it might be. So for them, risking a small amount on a small trade can feel pointless, like it won't really change anything. The problem is that trade size changes how every decision feels to that person. And when too much is on the line, everything can get out of hand really quickly. The normal price movement starts to feel threatening, and those small losses that for sure can and do happen feel uncomfortable very, very quickly. And then you start watching trades very closely, reacting sooner than you planned to, and feeling a need for things to just work. And once you're trading with that feeling in the background, it pretty much becomes impossible to stay on track and remain objective. And this is where progress tends to stall out. It's difficult to learn when each and every decision carries emotional weight. You're not really learning or making improvements anymore, you're just coping. And some small errors or mistakes can start to feel like just the end of the world. Now that's usually when people begin adjusting rules to fit what outcome they want, often without realising they're doing it in the first place. It's the tail that's wagging the dog at that point. And if someone starts to realise their trade size is causing unnecessary stress, they don't always scale it back straight away. There's often a feeling that reducing size means stepping backwards or admitting that the original setup wasn't quite right. So instead of lowering the pressure, people try to just get on with it and trade through it. Because ego can get in the way as well, and we never like to admit we're wrong. And that tends to make things worse, of course. Starting with a smaller trade size is about being careful and understanding that this isn't going to all happen in just a few days or weeks. You have to give yourself room. You need room to see how you actually react, room to make decisions and choices without unnecessary urgency or stress, and room to learn what suits you. At the right size, losses don't demand immediate action. They just happen, and that's where better decisions come from. Remember, in trading, you don't write the story, you read the story and try to give your best calculated guess about what the ending might be. And this also matters a lot when people use automated tools or systems. A system will keep doing exactly what it's told. If the trade size is wrong, then pressure doesn't disappear, it just gets repeated. The behaviour can change even if the system doesn't. And people can struggle in crypto because the amount they put at risk makes normal outcomes hard to take. Starting smaller doesn't really slow progress down at all. It actually gives you the space to build it properly with a better foundation. Staying in it long enough to learn is what actually makes the difference. Okay. Next time I'd like to talk about scaling and how to start to increase trade sizes without bringing the pressure straight back to yourself. Thanks for watching. See you on the next one.